Today, I'm delighted to be joined by two of the insurance sector's leading voices in pricing and data. Peter Kelly, Senior Managing Director in FTI Consulting's Global Insurance Services practice, and Chris Pearce, Chief Data Officer at esure Group. Peter's career has taken him from senior roles at global insurers, including leading global pricing and analytics at Liberty over in the US, to advising boards around the world. He's now one of the market's most trusted voices on pricing and analytics, and a prominent expert witness. Chris's journey runs from building data science capability at Hastings Direct into consulting with Accenture, and now leading data and AI strategy as Chief Data Officer at esure. Today, we're talking through their career journeys, how they still collaborate, where they see intelligent investment in AI, the impact of consumer duty on pricing, and where the next generation of pricing and data leaders will come from. Plus, their advice for anyone who wants to follow in their footsteps. I'm Steve Wright, Director of Gerrard White's Insurance and Technology Division. Let's get started. Welcome, guys. Thanks ever so much for outnumbering me today. I'm excited to do a deep dive into your journeys in insurance and really kind of showcase what the sector has to offer as fantastic careers. Wanted to start off with obviously acknowledging you guys know each other, going back to where that relationship started, and I guess kind of how it's progressed and how you still collaborate these days.
Sure, why not? I start?
Yeah, go for it.
We were at Hastings Direct in Bexhill, and I had been there for a year or two after being in the insurance industry for a good 25, 30 years, mostly as an underwriter. Someone who got into pricing. My business degrees were good, but I also had statistics as a background. And I could see that we were really moving the horizon of the technologies. And I needed myself, even though I was in management, to sort of skill up.
Sure.
And I met Chris and I said, I would really like it, and he did condescend to do this, if you would meet with me for a period of time over lunch. I'll buy you lunch and just teach me about the details of how the emerging technologies actually work. Because I don't want to be managing processes that I don't understand the foundations of. And I think we had like 5 or 6 lunches. And Chris came onto the team that I was managing, and we've been friends and colleagues ever since.
Fantastic.
Did I leave anything out there?
No, I think that's the crux of it. I mean, I'd been at Hastings for a few years. Prior to that, I'd sort of come into the retail pricing function to sort of grow out and scale a data science team and sort of, interject more advanced machine learning into their rating journeys. Look after all of the sort of data enrichment that's typical in that space. And after a few years, I'd felt I'd sort of not reached my limits there, but, I wanted to explore other facets of the discipline and extend my remit. And that's when sort of Peter came and offered me a pretty exciting opportunity to go into the sort of risk and actuarial practice to help do that, again, with sort of a very data science lens on things. I've always been super keen to try and push the boundaries of technology and algorithmic adoption in that space. Still am. There's a lot of opportunity. And that sort of led to a beautiful long-standing relationship where we're still talking about tech and changes and all the latest trends in the pricing space.
Fantastic. So you guys there is still a kind of collaboration there. Obviously, paths have gone in different directions, but from both of the points you're at now, that you still collaborate.
Well, certainly, collaboration is incidental to the friendship, if you want my opinion. We get together, we have dinner, we talk about trends. There have been opportunities where things in my business, I'm in consulting now, presented opportunities, and I would chat with Chris, see where he was in his career. Also, now that I'm providing services to the insurance industry, occasionally my firm will present some opportunities to Chris or other management members in his company. So I don't know. I don't think about their sort of firm boundaries between talking about business and having a personal relationship, but I don't think too many months go by without us touching base.
No, for sure. Yeah. I think our experiences are very complementary. Right? Peter brings great breadth of experience across different insurance practices, different regions, different sectors entirely.
Yeah.
I get great insight from that view and that perspective. I'm really focused on how we can ultimately use and leverage data science to change how prices are set in the industry across all of our products and market. And I think those two perspectives really augment the value that we can each deliver, not just to each other, but across our respective partners and network.
Fantastic. So, I mean, I guess like individually. So, Peter, I'll start with you. From obviously Liberty over in the US to coming over to the UK in around 2016, 17.
That's right.
That's right, isn't it? Yeah. Obviously coming over to RPC. Obviously journey through to Hastings and now FTI. I guess talk me through the journey.
Well, I am, as I said, an underwriter by training, and I know a little bit of the statistics and mathematics of what Chris does. But an underwriter is trained to ask the question, why, right? And I think that's a good thing to ask. And in fact, with technologies becoming even more advanced and some of the analytical pieces becoming more opaque, maybe more powerful, but more opaque, someone who asks the question, do we want to do that? Why does that do that? From an informed perspective of experience, I think is helpful to insurers. And as I've left the insurance side and now become a consultant, I find that senior management conversations, I need to hold my own on the technical side. I need to understand the foundations. But I am probably more in touch with the extent to which there's a degree of uncertainty in senior management decision making. And I can appreciate what they're grasping and grappling with. So today at FTI, I am the EMEA partner of the Global Insurance Services practice, and I work on a worldwide basis and held on to that underwriting. So not only do I do the technical, I now do a lot of expert witness work. So it keeps me extremely busy, and I'm very pleased with the way the journey's moved. But I haven't let go of the technical and foundational parts of insurance pricing. That's going to be with me, I think, for the duration.
Fantastic. And Chris, so from data science at Hastings Direct through to Accenture, and then esure and the journey you've had there. Give us a run through of your journey.
Yeah, it's been eclectic. But before insurance, I'd actually spent about eight years in different industries. Again, all sort of as a data science and data science lead. That was in banking, in automotive, in FMCG retail. Some of that stint was as a consultant. Some of that stint was working for a marketing agency, for example. So, a lot of different experiences, all the same in terms of data science, come in and try and use algorithms and data to improve and drive revenues in different capacities and contexts. It was then when I joined Money Supermarket in sort of 2011-ish that sort of steered me somewhat towards the insurance industry. That was an amazing experience. Again, very sort of marketing driven from a data science perspective, but also sort of helping the company re-platform.
Yep.
And then almost just sort of by coincidence, I had an offer from Hastings not long after the Goldman Sachs acquisition. Again, similar sort of remit, come in, grow out data science, try and add value through that lens. At the time, frankly, I didn't really envisage a career in insurance. I had much of the stigma that a lot of people have about the sector. Having gone into it, I've now been in it for 14 years. From a data perspective, it's one of the most richest industries possible, and certainly from a data science perspective, it touches on every facet of the discipline. So the range of opportunities and the breadth of exposure you can get is just phenomenal. So, yeah, I spent 6 years at Hastings, really trying to push the needle on machine learning, sophistication, pan-enterprise. Post that, I moved to esure. Again, this time, Bain Capital, with a PE firm that had invested in them, embarked on effectively a 5-year large-scale transformation program across the piece. That has been a wild ride, but we have also come out of it rather successfully. So again, I've sort of transitioned from leading data science practice in pricing through to ultimately becoming the CDO of the enterprise, and leading on their whole generative AI strategy and capability, looking after their core platform, and responsible for all ML AI across the whole business. So yeah, that's been a richly rewarding, if not grey herring, experience. And now, of course, as you know, we've recently been acquired. Sure. So one might argue there's another transformation to go running at.
And I guess a question to you both, if we're looking ahead at 2026, which is obviously on the doorstep now, if there's one kind of chart or data point that you're going to watch closely next year, why should somebody that isn't a data scientist or somebody within pricing care about that data point?
Yeah, that's a good question. I mean, for me, there's not just one data point. There's many, and most pricing, areas will be looking at hundreds, if not thousands, of data points each and every day to try and figure out what to do and how to react to the market. It's no secret that premium will come down in general next year. That will create tighter competition. That will take profitability out of the market, right? So it becomes increasingly important in those circumstances to find an angle to win business and to be really disciplined on how competitive you are in what segments. Usually that translates to, how can you deploy those market rates faster in those segments in the competition? I think, this might be a bit of a cheat answer, but I think watching the speed of execution in the market and the rate of price changes is going to be really important to stay competitive and relevant. I'd also add one more, is in the advent of generative AI, which everybody and anybody is talking about as well. I think it's going to be really important to keep a close eye on how the competition is leveraging that, especially in terms of revenue generation, which is actually very difficult to do in practice. And certainly in the pricing space, where those opportunities might be. So I think it's going to be doubly important to sort of keep your ears open on that front.
Okay, fantastic. Peter, thoughts?
I'm in a position where I don't work inside an insurance company day in and day out. So I only know about what's happening through the insurers who we serve, but I talk to a lot of them because they're our clients. It seems to me that in addition to the trends that Chris talked about, the fairness requirements that the FCA is placed upon the industry, and some of the divergence of strategies that I see in the marketplace are going to lead to some kind of shakeout, I believe. And I'm not saying that there's going to be one winner and lots of losers. There might be multiple strategies to victory. But I think we'll start to see certain evolution in things like an increased awareness of retention ratios. A lot of what we think about in the industry is new business acquisition, and it's a transparent market. I get that. But I am aware that some insurers are taking a fresh look at lifetime value. Which means directly they're going to start thinking about acquisition cost very differently. And then how the customer experience works at the moment of renewal presentation can both potentially influence the renewal as well as solidify their duty in fulfilling the doctrines of the fairness concept, right? So there's a completely different strategy to the price it better than anybody else at new business strategy, which is perfectly okay. I think that's just an example of something that could happen. But what I am observing is there's a very significant divergence in the approach that insurers are taking now compared to, say, 5-6 years ago, where I think there was more consistency from insurer to insurer in the technical foundations of the way they approach the pricing and underwriting problem.
Okay, interesting.
Ever more eloquent than me, but if I could piggyback on that, because I think there's a couple of really important points there. I would strongly agree with the predication that customer experience metrics are going to become increasingly more of a focus for insurers. It's like NPS, ENPS, those sorts of things. For precisely the reason Peter articulated, because retention, customer experience being a key lever of that is going to be ever so more important, not least because, of course, the advent of AI applications lend themselves to the improving of customer journeys and CX, right? So I'd completely agree with that point.
Sure. I mean, I guess from a recruitment perspective, we've seen a lot of investment, a lot of roles this year where people are really kind of, charging the chief kind of customer officer type role towards that piece, the retention, the customer journey, and making everything as on point as possible. So I guess that ties in.
I think there's a multi-market perspective on that. Steve. I think you're right. This is one area, I'm American by birth and spent most of my career there prior to the last 10 years. One thing that the American approach to the insurance customer is significant. It's very customer experience focused. And our market is far less regulated. And often we may have thought we're quite more sophisticated on pricing and other aspects. So there isn't too much to learn from other markets, but I think there is. I think some markets have lived and died by the customer experience. Now, I also think that our sophistication in the UK market and the freedom of regulation that we have, relatively speaking, can be a source of wisdom to bring into the US market, right? So I think we may see the adoption of lessons learned from other markets as we see things like fairness and customer value becoming real and not just theoretical in our market here in the UK.
Okay, and we kind of touched on AI there. Chris, I know you've spoken before about kind of separating AI hype from real delivery, and how significant investment at esure has shown a real, strong ROI from that. Is there any kind of AI data use case that you can kind of talk to us about that has really that you've scaled that's really kind of worked? And was there anything kind of in there that you kind of killed to make that happen?
Yes. I mean, today we've got, I think it's 18 generative AI use cases scaled in production. And, we consider ourselves pretty market leading in that respect. In some cases, that's 900 plus frontline agents being assisted in real time by some LLM type capability. In some cases, it's more niche to bespoke teams. To be honest, in and of themselves as individual use cases, the ROI varies wildly. But I think what's important is as you're sort of interjecting components across the end-to-end customer journey, those use cases really do start to stack up when they're used in combination with each other. So if I give you a couple of examples of that, consider one of our digital journeys, right? You might come into the insurer via a chatbot. We've all had experiences with chatbot, and not many of us have had good experiences with chatbots, right? What we found early on, of course, was many people were not being sufficiently served or answered by the chatbot. It was frustrating for customers, and then they would inevitably be then passed through to human agents via a live chat application. So, we thought, well, why not summarize everything that had happened between, the chatbot and the customer and have that summary appear at the point at which that customer is handed over to the agent, right? That one saves the agent having to sort of manually scroll up what would look like a massive WhatsApp thread to try and understand what's going on. We could get the algorithm to offer a personalized first response based on what had actually happened within that preceding conversation. And it would just create a sort of more frictionless handover, so you don't run into these circumstances where the agent is asking the customer the same question that the chatbot's asked the customer when they're already quite frustrated. That had some degree of benefits around things like AHT and EMPS after a particular period. But then we thought, well, okay, why don't we summarize the end of the entire exchange now? And actually we can automatically capture that summary in our policy management system. Now you're in a world where every single customer interaction has been recorded. That in turn creates a really rich database of information ad verbatim to really mine and understand what customers are actually talking to your business about in the forensic detail. And now, because that is happening automatically, you're saving what we call after call work. So, the agent might be speaking to you for 30 minutes on a chat. That when you go, they no longer have to memorize what happened and manually type it up from memory, right, which is fallible. So you're starting to streamline that. Agents can serve more customers during the course of a shift. You're streamlining AHT. And then you sort of layer on further and further use cases. So, one more might be knowledge retrieval. You ask me a question, I don't know the answer, so I click a button and an LLM goes off and searches for the answer in our sort of corpus of documentation. So now I no longer have to put you on hold for 2 minutes while I go and ask someone. I click a button and it's surfaced to my UI straight away. So each of these things is taking time and friction out of the overall journey. When you add all of that up, we've measured around about £7 to £8 million of operational benefits in 1 year over the sort of culmination of those use cases. We think that will scale to about 3x over a 3-year time horizon. And because we've been so diligent in how we've approached this, the cost to serve that is a fraction of the benefits. But we have got things wrong. We have had to pull POCs, and largely that's been led by the business teams that would ultimately be the end users of these use cases, telling us, we've tested this, it's not working for these reasons, we don't think we're going to use it unless it can do this. And we've either failed to get it to a sufficient level of accuracy for them, or we've decided it's not worth the 12 months of investment to get it over the line for the actual value case this will add.
Understood. Fantastic. I mean, obviously sounds like some significant impact there, and good to understand in detail. So Peter, from your vantage point across multiple insurers, where do you see analytics generally move in the combined ratio, if we're looking at pricing, underwriting, claims and fraud, for instance, and where do you think the value's overstated?
Well, there's the story that Chris just relayed is amazing when you think about it. We're talking about the adoption of a technology that was essentially unheard of 3 years ago, right? What I would say is, if you go back to early attempts at using neural networks or machine learning, and where were they 3 years in? Yes, there was like an initial wave of value generation. But then there was a longer period of realization of what these things could actually do. And when we look back, we would say that 3-year point, while it was amazing, we were still in the infancy of those technologies.
Sure.
And I don't know if you agree with this, Chris, but as amazing as these stories are, I think we are in the infancy of some of these technologies. There's lots of examples about that, but I think your story about the customer service and handle time is excellent. But I know of an insurer who's looking at the dynamics of the customer and the rep interaction and the role of generative AI to synopsize and summarize things, and has started to question whether or not they've lost the pitch, pace, and tone aspects of these interactions, and the summaries become somewhat sterile, right? And reducing handle time sometimes loses the human interaction value, right?
Yep.
So you don't want to throw the baby out with the bathwater. You want to use these technologies. And I think this is true for the non-generative AI technologies as well. I think we are still somewhat in the infancy of these technologies, and there's a lot of experimentation going on. I do think customer pricing will continue to be the forefront application, but also selection and underwriting terms are now starting to get more attention from the AI, the more advanced AI models. Some insurers are taking a fresh look at accept, decline, rule management, and things like that. I think those things this next wave it will truly be amazing. But this is why I refer to the divergence of strategies, right? Some insurers are starting to come to an appreciation that this is happening, and they're moving into customer value maximization. Others are moving into expense ratio optimization. And I think in the second wave, after the infancy wave, you've got everybody doing different things, and that's all good. But that is the recipe for a lot of winners and a lot of losers, and a shakeout happening. I think it's going to be an extremely exciting time in the next 2, 3, 5 years as we see what is the sort of real recipe for value generation.
Yeah. And I guess you kind of say 2, 3, 5 years that will move into that kind of learning period, and then there'll be a kind of a best way that everyone will go to.
Historically, that's what I've seen. I mean, my career is now 40 years in insurance, if you can believe that. So I can actually talk about market cycles, multiple ones within my professional career. It seems to me that early technologies, especially since we've had computerized technologies in the 80s when I joined the industry, you tend to have a 2-3 year window where the aha moments happen and people try things. My God, it's actually possible. And this, my God, it's actually possible becomes, of course, it's easy to do, and within 2 or 3 more years. But that doesn't mean you're at best practices yet. It means everybody's feeling the license to experiment.
Yeah.
And about the 3rd to 5th year, as I've seen it, you start to get the best practice conversations at the insurance conferences, and someone shaking their head, best practice. I thought that was a brand new technology. And you realize, no, this moves fast. And I do believe that we are now in that second wave. I'm aware of people doing a lot of experimenting and shelving POCs and looking for fast fail. And you tend to fail once and not revisit it. So the number of things you'll consider actually shrinks. And that's why there isn't a long period to best practices. It's a relatively short period to sort of weed out the failures.
Sure. Okay.
I would, again, a lot of really good points in that. For me, if I take it back to sort of data science and what's now termed classical machine learning, I would argue even in the span of my 20-year career, there are still a lot of companies that have data scientists and are doing data science, but are still really struggling to attribute value to that work in a really clear way. I think that's exacerbated in the early stages of the furor and the hype around LLMs, and it's kind of harks back to the same problem in my perspective. And that is often because the structure of the business or the operating model of the business or the more cultural elements of the business around being data-driven. I know that's buzzwords we hear all of the time, but what that actually means, that sort of experimentation mindset that we're going to be able to A/B test a hypothesis and use data to measure and monitor and observe the outcome of that and attribute that activity to the movement of that KPI, and that having that feedback loop to then sort of further iterate and evolve on that capability. I don't think many financial service companies have really sort of tied that knot really tightly and set those best practices and standards ubiquitously yet. And I think that takes 10 to 15 years in many cases, and it takes the right operating model, the right structure. I think in generative AI in particular, the coalescence of the skill sets that need to come together to execute on actually productionizing it is far more cross-functional than anything that's come before it. Yes, the technology is changing faster than ever before, but actually it's about how you organize your different teams across the life cycle of that and get them together and ring fence that network to actually deliver on that. And that's where, I speak to a lot of CDOs and execs in the UK personal lines insurance market, and I see that's where the struggle really is, and that's sort of the main reason why things aren't getting out of proof of concept stage, where there are those challenges.
Brilliant. Okay, thank you. Post Consumer Duty, what has actually changed in how you design and review pricing models? And if you were to remove one commonly used rating factor on fairness grounds, what would that be?
Well, everybody in the UK market is paying attention to it. I can tell you that. We help our insurer clients in some areas of consumer duty. Compliance as a strategic part of the business is now commonplace. I think it's all good. I do believe the regulator has done some really good things here. As you know, I come from the US, and it's a very, very regulated market by comparison. And I ran state operations, and insurance is regulated at the state level. And I lived in the state of Texas, and I literally had to go to the insurance department and defend the structure of my rates, which I could change once a year. So the concept of defending and standing behind the way that you have determined a price of a customer, I think is something that resonates with a regulator, many of whom we work with, who has a fairness orientation, Has the market delivered fairness to the consumers? And that's an easy thing to argue that perhaps not, because of this massive amount of data feeding prices and things like that. I would say that as an underwriter, underwriters live in the world of causality. Mathematicians live in the world of fortuity, if I may say, if you don't mind me saying that. So when I first started to use credit in the 1990s, commercial property insurance and personal lines insurance, that was problematic. How could I go to a regulator and say someone with a lower credit is going to be charged more for their private motor insurance? And the regulator wants to know exactly why is that?
Sure.
And the answer of, well, because statistically we have a higher representation of claims in people with low credits is not a satisfactory answer. And yet its statistical predictive powers are almost undeniable. Yet, if you start to move down the horizon of fairness as the primary view and lens of the regulator, things like credit that are absolutely independent of the peril, right, will start to be probed. So I think that is one. I'll say one other one. You only asked for one, but I want to give you two. Do you know that most insurers will have models which increase the cost of someone's insurance if they've had a prior claim, they've had a prior loss? And that may sound fine, except the application of that logic is across perils. So a customer could have in their home a natural disaster loss, in the US, a hurricane, here a winter storm. And the next year, the cost of their theft insurance goes up in addition to their natural disaster insurance. Well, mathematically, it all works out. But if someone is probing and having to defend a rate and defend to a regulator who's really interested in fairness, all of a sudden there's a very new question being asked at the table. So these concepts, I think the concept of fairness, wonderful that the regulator is doing that. Applaud the regulator and the insurers for trying to go to the next level. But I think it could bring some pretty interesting conversations for things like this, much of which would harken back to years of my operational experience in the US.
Yeah, that point in particular on the aggregation effect across all perils that can compound if you don't control it effectively is a very real one, and potentially you could argue potentially unfair as well in certain cases. I would argue it's very common certainly in risk pricing to sort of you tend to model the average behavior of statistical cohorts, and when that compounds over multiple cohorts, you're averaging everything out to a certain extent. I think it's going to be increasingly important in pricing practices to have a much more forensic eye on vulnerability. Now, vulnerable customer is a very, it's not particularly well defined. Yes, the FCA have a honeycomb model for it, and so on and so forth. But I think it's going to be incumbent on pricing teams to really tease out what is our definition of a vulnerable customer, or what are the different criteria for different types of vulnerability, and how are our individual models attributing outcomes to those types of people versus everybody else, and is that degree of discrimination really the right one? I think it's going to be important to do carry out that type of exercise in a lot more detail than has been done before, if we really want to claim we're pricing fairly. I think, I don't know whether any insurers do or don't, but talking about what we would remove, one thing that I personally struggle to think is fair is around sort of social media activity. Again, to Peter's point, there's probably statistical validation that, certain social media activity correlates with propensity to have certain kinds of accidents or circumstances. But I don't think it's right to leverage effectively what someone does in their own private life with risk.
Yeah. Understood. And I guess I may have answered that, both of you there, but like if there's anything kind of in this debate that maybe you've seen as kind of deprioritized, what would you say that might be?
Historically, many insurers in the UK and outside the UK have had a separation in their business, principally first on distribution strategy. And then after that, various things are done to develop the product for the customer, the price for the customer, the underwriting, and so forth. And I think that made sense when there were distinct and multiple distribution strategies that were delivering distinctly different experiences to the customer, and the customer's selection to use a particular distribution strategy was sort of telling you something about the customer. But once you get the degree of transparency in pricing that we now have in the UK because of price comparison websites, I think the dominance of the distribution strategy as the principal segregation mechanism for decision making and segregation, it's reasonable to question if it should have that dominance. Some insurers have a hybrid strategy where its distribution is contemplated. Some insurers have gone to the point of being completely agnostic, believing that the selection of the distribution strategy is incidental to the person's risk characteristics. And that is a big change alone from where we were maybe 10 years ago. I think distribution has its place, but I think it's probably becoming less important for things like pricing and underwriting selection than it has been in recent years.
Yeah, I'm trying to find things to disagree with you about, but I genuinely can't.
We'll get there.
Again, I fully agree with the dominance of the distribution monopoly that exists in the UK personal lines market for sure. Whether there'll be increased focus on direct business and channels through direct or not will remain to be seen. As you know, there's been a lot of M&A in the space over the past few years. Insurers, certainly the bigger ones, are going to preside over an increasing number of brands. That's going to bring about, the challenges of how do you optimize those brands across your respective portfolios in a way that, you're not self-cannibalizing, and that actually you can create differentiated propositions for customers and a meaningful reason why they should pick one over another. In terms of deprioritization, I can only speculate, but it's interesting with what's going on in the EV market at the moment. Some of the government changes, that the repairer network probably isn't scaling as quickly as many insurers might have hoped or expected. Yes, market share in that space is growing, but again, it's probably not growing as fast as anybody expected. And I wonder whether many might take their foot off the gas in terms of,
figuratively speaking.
Yeah, exactly. Right. I tried to get fun in there. In terms of focusing price sophistication and data in that space, I wouldn't be surprised if I saw less focus on that, certainly in the next year or two.
Brilliant. Okay, Peter, last time we spoke, I was fascinated when we started talking about the expert witness work that you do.
Oh, yeah.
So much so, I'm probably going to sit there all day and just listen to that. So, could you, tell us a little bit about that? And I guess kind of having done this, kind of what have you learned about how regulators and courts kind of view insurers and I guess your risk assessment and just give us some more details. I'd be
happy to. I never started out my consulting career thinking I would be doing anything like expert witness work. FTI is a company whose heritage is in expert witness work and still is, at 8,000, 9,000 employees, we probably have a huge number that are doing that kind of work, and law firms know our name for that. Much of the work I'm involved in is not yet public knowledge. I haven't yet testified, but I've been writing reports. But there are a couple that have become public knowledge, and I could talk about. I tend to lend practical experience to the assignment as an underwriter. So in a court of law or a trial, I can say, I wrote policy language. I literally wrote the words that were in a policy. And I can offer a commercial view on what an underwriter like myself might be thinking when these words were put in place. So you're talking about what's legal consequence of those words. I appreciate I'm not a lawyer. I couldn't offer anything there. But I can talk about what the commercial reality is, and I do that. But I do work for regulators in addition to law firms and insureds and insurers in contested cases. One recently, the state of Utah in the United States has essentially a single utility, electric utility, that was submitting its annual rate program. And it had a very significant price increase for the proposed price increase for the citizens of the state, which was driven in part by the passing on of insurance costs associated with wildfires in the western United States. Now, the utility owns the power generation for 5 or 6 western U.S. states, and they had purchased wildfire liability insurance on an aggregate basis, which makes sense because it's probably cost effective. But then they had allocated it in a particular way that resulted in the state of Utah getting a very significant increase, even though the state has power lines that are not near any people's properties, all sorts of characteristics. And the state of Utah's Division of Public Utilities hired us and me and an actuary from our team to provide a report to independently look at the weight allocation mechanism. And we used natural disaster modeling and submitted reports, rebuttals, surrebuttals, and then testified. And my most favorite is cross-examination. So my actual testimony was 30 minutes. My cross-examination was 5 hours. And that is what expert witnesses should be prepared to do. But in the end of the day, the commissioners found that indeed the allocation could have been improved and should probably have been based on more sophisticated models like the FTI work. And we saved the citizens of Utah about $250 million over a 4-year period. And I'm happy with that. I think it was an improvement. But I'm really happy that the utility, in months to follow, would appear at other settings talking about their methodologies and had adopted some of the work and the approaches that we had used in an adversarial setting, right? So when the other side of the dispute has sort of adopted some of the framework that you've used, even though they have ended up, they're going to have to find somewhere to charge that money. It won't be the state of Utah in all likelihood. It's very gratifying because you think you've taken this debate to a new level. It's not just about winners and losers. Sometimes expert witness work, if you bring underwriting, actuarial, analytical, insurance knowledge, can actually take the debate to a new level. And that's very gratifying.
Chris, I guess question I wanted to ask you now was, we're looking at kind of future talent, future success stories of people coming into the insurance sector. So from people that are outside looking in, if we look at the personal line space as a good example, there's a lot of acquisition, and so, as I say, people outside might kind of see it shrinking a little bit from that. I guess where would you see, if you were to talk to somebody kind of outside the sector, in terms of what the opportunities are to kind of come in and really kind of thrive in the types of roles that would come underneath yourself, let's say? Yeah. How would you describe that?
Yeah, it's a good question. I incidentally, from where I sit, I actually see opportunities growing in most parts of the insurance chain. There's just so much opportunity, and it's one of the reasons why I've lasted 14 years in the industry, if I'm honest. I think certainly I'll start with the harder side and then go on to the softer side, which I think in many cases is arguably more important. But definitely an analytical mindset, I think, is fundamental. There are increasing demands for a lot of technological skills. So programming, is something that will set you in good stead to work in most areas of an insurance company. Algorithmic experience, statistics and maths background, or anything that's just sort of more analytical, is very often sought for. The ability to build models and or understand statistics. With the advent of generative AI, software development skills are becoming increasingly important. as are engineering and architectural skills as well. So, how you integrate different systems together, how you build applications, or how you leverage the many thousands and millions of applications out there and stitch them together in some way to create something novel. So I think those skills are highly in demand, and I don't see that demand dissipating anytime soon. Certainly for the companies that have a lot of capital behind them. I think on the softer side, you have to be very inquisitive and curious. You have to want to understand, data and understand what it's telling you and try and seek actionable insight from data. And, typically you can't do that effectively if you haven't got a genuine passion for understanding how the business works, right? So I think, you've got to have that passion, that intellectual curiosity, but also that commercial curiosity as well, to figure out, like, these are the real problems in real life that need to be solved.
Sure.
Here is what I can bring to the table, and here is how we can sort of help each other solve that challenge. I think more generally beyond that, and I say this to everyone these days, as I've looked across my own career and all of the different times that I've had to upskill, reskill, learn new things, and it has been extremely regularly, and that gets harder as you get older and you get other responsibilities outside of work, right? But I think now more than ever, the ability and the willingness to adapt is one of the most fundamental traits in success. And I think in insurance, especially with the rate of change in the market, you have to be really willing to learn and relearn, and you have to be motivated to do that.
And I mean, I guess if you were to look at the people, not specific examples, but if you kind of think of the most successful people that you guys have developed and kind of moved along in their career, like you touched on both kind of skill set and mindset there, which is great, because that was what I was going to kind of ask you here, was what are those kind of main kind of mindsets, as opposed to the kind of technical skills that people are able to adopt to really kind of progress their careers?
There's a danger to over generalize the answer to that kind of question. I've had a handful of people I've interacted with that I've seen their careers have a trajectory, and it may be the match of their life circumstances to their personal, chemistry and so forth. But a couple of things that I think might be in common, right, is this this balance that a person has to learn something new in terms of a capability, a technology, a piece of what feels like factual knowledge, and to grasp onto it, but to not let go of skepticism, right? To not let go of a little bit of, I wonder if it's really true. In insurance, it's not like some other industries, right? We are always grasping, working in that area where signals and randomness are kind of interacting. And it's really helpful to have folks who can work hard to learn a new skill, use data to generate insights, but the insight always comes with a grain of salt. I wonder if it's really going to play itself out in the market. Are we going to get the mix of business we expect? Is it going to be as profitable as we expect? Because it never is, right? No one really gets that. There's the winner's curse phenomena and all of those things. So I think people who have that trait, it is like you say, Chris. It is this inquisitiveness, but it's also a little bit of setting a high bar for something that you put a lot of faith in, right? And you don't see that balance that often, but once in a while you see that person with that skill, it drives them to want to learn more, to take the next step, to do experimentation, right? And to not feel like I learned the magic and we're just going to print money now, right? Because it never works that way. And for that reason, I think our industry will continue to need the people like Chris talked about, but we'll also need a cognitive scientist here or there, right? We need someone who does systems thinking, people who use non-convergence, right? Non-regression-based techniques. They're stochastic modelers, right? People who might have had a a career in the aviation industry, right? There's a place for people with those skills in our industry, in addition to the ones that Chris talked about, who will have, I think there will be, like he says, a lot of jobs. But we need that diversity because human beings' lives are constantly changing and they present new sources of risk and patterns of behavior every day. And we need folks who have an eyes wide open attitude to serving this marketplace.
The cognitive science one is a really interesting point. I mean, that's definitely something that I've seen more and more insurers and underwriters in particular actually talk about the need for as people's life stages change and therefore their needs and circumstances change with that. I guess to address your question around sort of what has made individuals stand out in my experience is, and forgive the cliche, but I think technical teams do technical stuff very well, but to bridge the gap between I have built a technical product and I have put a technical product into the real world in such a way that is changing something positively and everybody is acknowledging that same positive change, is actually very difficult to do. And in order to achieve that, you don't just need the technical leadership, you need influence and leadership in bringing lots of different teams in the business together around taking ownership and accountability and in delivering that objective. And then it's not just once and done, right? You've got to manage it, you've got to monitor it, you've got to evolve it, you've got to iterate it, and that usually is across a broad spectrum of people from different backgrounds, different perspectives of the world, different interests, different agendas. And so that leadership element and being able to bridge not just the leadership across the business and the commercial astuteness, but actually have the technical leadership that can, drive value from, the technical doers, I think is really rare. But if people can hone both of those, from my experience, those tend to be the people that do exceptionally well within insurance.
Okay. And with the benefit of everything you've both seen, what have the years in pricing and data taught you about this as an overall career choice?
40 years, I think I should go first, right, Chris? First of all, I love it. I absolutely love it. And I wouldn't have, if someone had said you'll be spending 40 years more or less in this area, how we feel about it at the end, I would say, finally glad it's over. Well, it isn't over. I don't want to stop. I absolutely love it. As I said, human beings' lives are constantly changing, and we're trying to use mathematical models and decision-making processes to fairly allocate the costs of the risks of the whole pool, right? It's a wonderful thing. It's a privilege to work. I feel it's a privilege to work on that. You work for your insurance company. They buy reinsurance. That reinsurer buys reinsurance. You're doing something that affects like the whole world, the capital of the whole world. That's amazing. There's always insights. There's all sorts of decision-making. Chris talks about database being a data-driven organization. And I think we are evolving to an evidence-driven management culture because data is part of that, but evidence includes what data tells you. It also includes what you know to be true from an underwriting perspective. And the blending of those two things, you work at it your whole time, but society's changing the whole time as well. How better career could you have, right? That there's constantly a new challenge. So, I've seen natural disasters. I've been in, paper mills and dams and sit before a regulator and be challenged by in a court. I never thought my career would take me to any of these places. I'm living in the UK. I'm a UK citizen and a US citizen, and I never dreamed I'd do any of these things. And that, pricing and the insurance industry has given me life experiences that I am just incredibly grateful for. I love what I do today. My clients, my company, the insurance industry, part of the London worshipful company of insurers, and looking forward to tomorrow. What could be better?
Brilliant. Chris?
Yeah, I mean, again, being completely transparent, I remember the very first job offer I got post-graduation was for a pricing analyst position. And I turned it down purely on the basis of I didn't think it was an industry that would interest me. Much later on in life, having spent 13, 14 years in the industry, the reason I'm here is because it's so fascinating, and the wealth of opportunity and the wealth of data that you have at your disposal, and the opportunity for change and real impact is just never ending. In certain parts of the industry, like retail pricing, for example, it is almost as fast and dynamic as the stock market in truth. But you look at the breadth of an insurance company, you've got operations in the contact center, you've got fraud, you've got claims, you've got pricing, you've got marketing, you've got reserving, you've got premium finance, you might have telematics. Each of these areas is like a business in and of its own right. If you're lucky to be sort of in a centralized function, or you've got exposure to that, it's just, there's so much change I'm confident the industry collectively can achieve over the next decade and beyond. And just the opportunity is massive. I don't see anything slowing down, quite the opposite. I don't see myself going anywhere else now, having been in it. So I think it's there's certainly no regrets. I think the industry needs to do more in actually articulating just how exciting it is. Yeah.
Absolutely. I mean, look, part of our jobs when we're doing graduate recruitment is just that. We're working with pricing, underwriting grads who have got that kind of skill set that can fit in a lot of other different sectors. That really exciting stuff, and they don't know what you guys know about insurance, and it's that opportunity there to really sell it to them, really excite them, and it's amazing to see the change in perspective from going to an interview as an option to coming away and being really keen for that to be a career choice. And I'm sure, I guess you guys have just answered the next question I was going to ask, but essentially when you've got people sat in front of you that have these other options in front of them, and you want them to really buy into what you're doing and the problems you're solving, like, well, how do you articulate that?
I have the privilege of being a guest lecturer at Boston University in London campus, and I do it 2 or 4 times a year, and I speak with students who will be graduating in the next 6 months or less, and I have never met one that said, I want to get into insurance at the beginning of my lectures. But I also show them a little graph of my career and a couple of pictures that go with the stories that I can tell, right? And I don't embellish it. I simply talk. I'm an alum of Boston University, so we develop a chemistry, the students and I. But then I show them, trajectory with the pitfalls, with the ups and the lows, and then they tend to ask questions at the end, just like you did. What do you think about having a career in this area? And I can tell you that probably 15-20% will reach out to me after the class and say, I'd like to connect with you on LinkedIn, and I'd like to talk about maybe considering the kind of directions that you've had in your career. So I do agree with you, Chris. We don't do a good job as an industry of promoting the excitement and the intrigue and the fulfillment that you can have in our industry, especially in this part of it where we are fortunate to work. But when we get someone who has to sit in that class for 45 minutes till that guy's gone, I can hold them for 45 minutes. By the end, they've seen the light, right? And that's one of the reasons I've joined the Worshipful Company. So it's very focused on education and bringing new people into the industry. And I will say, I do have a daughter who is an underwriter. The only one of my kids who will succumb. She's at a great company. Caroline is at Vitality Insurance. So there is the next generation. And yours are a little young to be underwriter or data scientist yet. But...
Yeah, I'm working on it.
Okay.
They know what I do. Whether that will interest them or not, who knows. I think for me, I do 2 very specific things when speaking to candidates. I try and steer away from describing the job in terms of a role description or a profile, right? I actually talk about the things that we have done, the challenges that we've solved. So I outline, these are the challenges that we've had This is how we've gone about solving them. This is how we've gone about actually making the thing happen. And then this is the process that we went through in order to actually get that feedback that actually made us feel like we're making an impact in this life. So I try and bring all of that to life and talk about the humanistic aspect of it rather than the corporate aspects of it. The other thing that I do that I believe is really important is I bring the team into the interview process. So you meet the team. I mean, I think the most important thing in decision making in new roles is actually understanding the people that you are going to be working with. And if you can get a glimpse into, wow, this is a really talented team, or this is a team that I already feel like I have a good chemistry with, or I can learn from, that often is as important, if not more, than many of the other facets that's on offer.
Fantastic. Great stuff. Well, I mean, I guess that kind of brings us to the end here. And look, guys, I obviously just wanted to say thank you ever so much for joining us on the podcast today. Really, really enjoyed it. And I obviously hope to speak to you both again in a similar vein in the future.
Thank you.
Look forward to it.
No problem. Chris and Peter's career journeys are fantastic examples of what's possible in the insurance sector. If today has sparked something in you, and you'd be keen to find out about steps you need to take to follow in the footsteps of these guys, I would love to hear from you. Please feel free to get in touch.